Assalamu alaikum wa rahmatullahi wa barakatuh. This is Mohammed Aljaber here again with another video, another exercise from chapter 6 exercises from our managerial accounting course. In this video we're going to go over exercise 6-10A. Now, as it says here, this is an outsourcing decision related question. So let's read the question first and then we'll go over what we need to do in order to solve this question. It says Steel Bicycle Manufacturing Company currently produces the handlebars used in manufacturing its bicycles, which are high quality racing bikes with limited sales. Steel produces and sells only 10,000 bikes each year. Due to the low volume of activity, Steel is unable to obtain the economies of scale that larger producers achieve. For example, Steel could buy the handlebars for $31 each. They cost $34 each to make. The following is a detailed breakdown of current production costs. And then they're giving us here a bunch of information that relate to the production process. Unit level costs include materials, labor, and overhead. The materials cost $16 per handlebar, the labor costs $12, and the overhead costs $2. And then we have allocated facility level costs of $4 per handlebar. Okay, so that brings up the total to $34 for each handlebar that the company produces, right? And then it says, after seeing these figures, Steel's president remarked that it would be foolish for the company to continue to produce the handlebars at $34 each when it can buy them for $31 each. Now, what is required here? I think the requirement is obvious. The question says, do you agree with the president's conclusion? Support your answer with appropriate computation. So we are going to analyze this situation and see if the president is actually right in his conclusion that the company should actually go ahead and outsource the handlebars and spend $31 buying these handlebars instead of producing them in-house for a higher cost, which is the $34 for each handlebar, right? So in this scenario, we don't have to worry about revenues. Remember, for special decisions, we want to see the relevant revenues, the incremental revenues, and the avoidable costs, right? Here, we don't have to worry about revenues. We're just going to worry about the costs, okay? So we'll go ahead and list the cost items that are relevant, which are the avoidable costs, right? So what I'm going to do is I'm going to say cost item here, okay, and then we're gonna see its cost per unit, and if you want to be a little fancy, you can also calculate the total costs for each item, right, based on the number of handlebars that the company actually produces, which was given to us here. They produce 10,000 bikes, right? So the first cost item is the cost of materials, right here. So cost of materials, that's $16. If we multiply that by the number of bikes they produce, that would be 10,000. So 10,000 multiplied by 16, that will give us 160,000. Okay, so that's the total cost of materials that they incur. Then we have the cost of labor, which is $12 per unit. So $12 again multiplied by 10,000 bikes, that's $120,000. And then we have overhead, a per unit or unit level overhead. So we'll say cost of unit level manufacturing overhead. That would be $2. 2 multiplied by 10,000, that's 20,000. All right. Now we had one more cost item here on the data that was given to us right here. But remember, this is an allocated facility level cost, right? That means that our production facility incurs that cost, and that cost is not directly related to the production of the handlebars, but it relates to whatever other costs that the company incurs to keep the business running, right? So it could be company president's salary, for example. It could be utilities expenses for the overall facility, whatever it might be. But because it's an allocated facility level, that means it's not an avoidable cost. That means that either the company, whether the company produces in-house or outsources the handlebars, that $4 cost is still going to be incurred by the company, right? So remember, here in our analysis, we only pay attention to avoidable costs and relevant revenues. For outsourcing, as I said, we don't really think about the revenues right now. We just consider the avoidable costs. So what we're going to do with this $4 is we're just going to ignore it. We don't incorporate it in our analysis. So now I can close this off, okay, and calculate the total cost for producing each handlebar. And because we had it here as a per unit column and a total column, we'll see per unit, that's 16 plus 12, that's 28, plus 2, that's $30. Okay, and of course the total is going to be just the per unit number multiplied by 10,000 as well, so that's $300,000. And as you can see here, now we're not really comparing $34 to $31, because the cost to buy the handlebars is going to be $31. And that's why the president made that remark or that conclusion that it would be cheaper to actually outsource instead of produce the handlebars in-house, because he took all of these costs into consideration, whereas he should have excluded this specific cost. The facility level cost, the allocated facility level cost, is not really relevant, because the company will not be avoiding that cost if they outsource the handlebars, right? So after excluding this, we calculated the remaining costs, and it came up to $30 only, which is less than the $31 cost of buying or cost of outsourcing each handlebar, right? So that means to answer the first question, do you agree with the president's conclusion? The answer would be no. And you can elaborate. You could say that the president was wrong in considering all of the costs, where he should have excluded the facility level cost, whatever way you want to call it. However, for us, we're just going to pay attention to the numbers we came up to, right? So we'll say no, we do not agree. Okay. The handlebars production in-house only costs, what was the name of the company again? Steel Bicycle Manufacturing, so we'll just call it SBMC. Cost SBMC $30 each, which is less than the cost of outsourcing the handlebars for $31 each. Okay, as I said, you could يعني rephrase this whatever way you prefer, as long as you get to the right conclusion, which is that the company, steel bars manufacturing company, should actually continue to produce in-house because it's cheaper for them to continue to produce in-house. All right, so that would be a model answer for exercise 6-10A. I hope everything is clear, and I hope you enjoyed this rundown of the exercise, and I'll see you in the next one. Take care.